When you get cautious, I listen that little bit more carefully because you've been so constructive through 2020, especially when others weren't. Why now, Lisa?
Well, look, our perspective is that, markets climb a wall of worry, and we've now priced in, I believe, an extraordinary amount of good news. We've priced in another round of fiscal stimulus. We've priced in a gridlocked government under a new Biden administration. We've priced in, the vaccine, and we've priced in this big rebound in the middle to end of next year where, there's pent-up demand for services, the economy reopens, everyone's, traveling and going on vacation and eating in restaurants again. And quite frankly, consensus expectations have already priced kind of a 25% year-over-year growth in corporate profits. And so a lot has happened. A lot's been priced here. And so one of the things that we're just beginning to say to folks is, what is that next big positive catalyst? Or more precisely, what is the big worry that's going to weigh on markets that we can get an upside surprise on? That will be a positive catalyst. And right now, we think that this is a market that's really running on fumes, meaning flows. It's running on cash chasing and coming in off the sidelines, and all the hedge fund managers unwinding their shorts before the end of the year. And, those are the kind of things that can just stop on a dime when the money runs out. So we're cautious here.
Typically, Lisa, if you expect turbulence, the cautiousness nature that you're taking and displaying right now, you put on a tin hat and you buy some treasuries. Lisa, you can't do that anymore. You might be able to put on the tin hat, but buying some treasuries might not be the option in the same way. Maybe yields don't drop in the same way. We've questioned that many times over the last several months. What do you do now, Lisa, into 21? If you are cautious, at least in the near term, perhaps out several months, how do you position for that?
Yeah, so that's a fantastic question, and it's the question that all of our, clients are struggling with. And so, where we've been focused in the short term is cash and gold, quite frankly. Treasuries are probably, to your point, not the answer. And so maybe you can own some ultra-short duration here and things like cash. But gold would be some of the things that we're buying right now when there's all this euphoria. The other thing that I would say is, quite frankly, options and buying some protection in the market is something else that for clients who can do that, we're talking about.
Lisa, for someone that's had such a wonderful year off the bottom, what funds that cash position? What are you trimming? What are you selling? Is this a broad de-risking or de-risking in certain areas of the market?
So we continue to just take profits in what have been the highest flying growth stocks, the long duration assets, those mega cap secular growers. Obviously, some of the recent IPO candidates. We've tried to encourage clients who have had exposure not to be overzealous and greedy, quite frankly, and take some chips and really try to redistribute it to areas of the market that have more value and quality support. We're still finding a little bit of that in financials, a little bit of that in some of the consumer discretionary, some of the materials stocks, some of the energy stocks. But there's not a lot that is super exciting in the U.S. market. And so, we're also encouraging folks to maybe look outside the U.S. where valuations are not kind of in a, 100th percentile of history.